Hey, what's happening? It's Trader Tim from EminiMind. It's actually Wednesday, the 4th of October, doing the trade recap video. My week's been a little flip-flop, so tomorrow morning we'll be doing the live trading session. EminiMind.com/VIP is the link for that. And then, so today I thought I'd do a trade recap video. There were quite a few trades and some good ones and a couple good lessons in here as well from just observations from the day. So I guess before we get into the trades, just take a picture of the daily chart real quick. Now, when we opened today, well, the whole day was inside the prior day. But if you look at yesterday's range, 65 points, that's a pretty big day. Our ranges are getting bigger, volatility is up a little bit, and so the bigger ranges help give us more movement intraday. And when we are range bound, or like today, inside yesterday's range, it does help give us movement and make for a lot better trading opportunities. So the first trade off the open here was about 9 minutes after the bell. We had a nice inverted hammer, and those are always good ones to take. That's on the 1 minute chart. Sometimes I get the question about the Hakanashi. You notice on my right chart, the 512 tick chart, it looks a little bit different. Like the candles look a little bit different. And so I only use the Hakanashi candlestick on that 512 tick chart, just to smooth it out a little bit. The Hakanashi takes the midpoint of the prior candle and uses that as the opening of the new candle. So you're not really interested in the shapes of the candles on the 512. You're not looking for hammers and inverted hammers and those kinds of things. And that's the only chart that I use it on. So all my other charts are going to be just traditional candlesticks. So on the 1 minute, having that inverted hammer, right at highs, great short setup, a nice small candle, 2.75 points, and this is exactly what you're looking for and expecting. You get into the trade, the high of the next candle, so the signal bar is that inverted hammer. The high of the next candle is like down in the bottom half of that inverted hammer. So as soon as you get in the trade, shortly after this inverted hammer closes and candle closes, you get in the trade, it drops like a rock immediately. Your stop, 1 minute after that, when this big red candle closes, is now down here. And so even though the initial stop was 3.25 points, all of a sudden, you're down here like 1.5 as your stop within a minute, which is awesome. And then you can just trail your stop above each candle's high, and that one was good for like 6.25 points, I believe. And that took us down to here, about the 15-minute mark. Then we had another one. This one was a hammer down here at 6:51, and that was this situation right down here on the nicey ticks, where we have lower lows happening on this whole move down. And then you get over here, and at 6:51, you put in a higher low. And so you've got a hammer. That hammer is actually right down near the low of the day. It wasn't the exact double bottom off of the first candle of the day, but pretty close to a double bottom. You get the hammer, so buying above, one tick above that candle's high. I'll show you what the 512 tick chart looked like. That could have been a retracement like that as well, so it looked like that. And so higher low, put in on the nicey tick. I kind of like those patterns. When it is in conjunction with this double bottom back here. So that one didn't get a huge move. By the time you trail your stop, it was like 1.5 profit on that one. And then the next one was a retracement. And that was at 706. And so that flip over to the 512 tick chart here. That one was a short at the bottom of the 30-minute range. So that's on the 1 minute chart, that's this right here. And so if we look at if we start with a full halfway back, I'm going to draw it like this. And this is kind of the halfway back short from the first half hour. We already had our, just after this kind of super messy price action up here, we closed the first 30 minutes. So that was like right about here. So we had this really messy, kind of trade through the 61.8, sell off, trade through the 61.8, and you notice that also broke the opposing short. So this area was really messy. So I didn't try to take anything short up here, because we broke the 61.8 and then we came down. And it's an inside day. We're a little bit cautious, and we're also right in the middle of the 30-minute range. So if we had stayed the rest of the day in the 30-minute range between these two gray lines, it would pretty much have been a no trade zone. But since we dropped, and then all of a sudden we're trading below the 30-minute range, now we can start looking for, in this case, short trades. And so coming off of this kind of larger halfway back short, seeing, okay, well, we bounced, we got almost to the 50% and then sold off. You're starting to see a little bit of stair stepping down, and then we break the 30-minute low, and it's like, okay, good. Now we've gotten below the low of the 30 minutes, and then we put in a low tick down this consolidation. And then breaking that low tick, now you have a tick divergence. So when you get a low tick at lows on the nicey tick, I think it was at 703. Yep. 703, low tick at lows. Okay, now you could potentially be bouncing. That could potentially be the low of the day. However, in this situation, you don't want to be taking a long right underneath the 30-minute low, right underneath that resistance point. So the thing to do is to wait through this consolidation, see if we can break lows. And so at 706, we're actually up here, 705, 706. We went lower with our price at 706, but we did not make a lower nicey tick. So we have a tick divergence. We made a lower price after the low tick had formed at 703 and the nicey tick. So sort of drawing up the retracement in a way to where, okay, yes, this is the next retracement, the next swing high to swing low. And it lines up perfectly with the 30-minute low. The distance between the 50 and the 61.8 is within 2 points. So if you use a 750, 42.6750 as your short entry, then your stop is going to be a 69.50. So that's up here above the 61.8. And you've got that resistance, you got the tick divergence. And so that is where I would wait to place my short, as opposed to trying to dance around this this messiness here. Yeah, you would have got a first target getting short here, I believe anyways, 50, 75. Yeah, would have just gotten the first target and, move your stop to break even. So it's not really no harm, but it could be harmful in other situations. So I'd prefer to wait, get underneath the 30-minute range, get out of that consolidation, get underneath the 30-minute low, and then take the short there. And then you could either trail the next 50% like this, but that was kind of big, so I decided to come in and trail each candle once we broke lows in the day. You'll notice not sure how well you can see this, but this gray line that I'm going to put back on here is the negative 61.8 of the short from above. That's this here. So you were kind of at an extended point, and so getting aggressive with the stop. The breadth wasn't terribly bearish either at that point. So coming in there and tightening the stop. And then so that one, I think it was 3 points, and then about 5.5 points with the run down. And then we put in a low tick, 708, low tick at lows. And so now you're thinking, okay, well, it's time to get long on a break of a swing high, take the next retracement long. But this one, unfortunately, I was waiting for it to break the 61.8, by 2 ticks, and it didn't. So I passed on this long setup here. What you can do then is you say, okay, well, yeah, it wasn't the cleanest, but it bounced. Then it broke the 61.8 here, and you can take the long on the next retracement, like so. So, having a little bit of patience, kind of the theme of this video, I guess, patience, will help you be more consistent over the long run. If you focus in on just this individual trade, and you say, well, see, if I don't wait for the 61.8 to break, then I can just, get in on the long and don't even worry about the 61.8 breaking. And sure, this individual trade, it worked out, but if you look at 50 trades that are very similar in setup, you're going to be underwater if you don't wait for the 61.8 to break. So you don't want to get fooled or tricked into a few outliers or a few trades that kind of break your rules. Better to try and be consistent, and in order to be consistent, you need to be repeatable. What you're doing needs to be repeatable. So I'd rather, limit my, both my drawdowns and extreme profits to be more in the middle of the bell curve and keep my, P&L more consistent on a, weekly basis. So this little long here would have been the one worth taking, a 63.75. That ran us up into the bottom of the 30-minute range again. And if you look at, let's see how I drew it up here, this prior retracement, the 50, we kind of came up and retested it. So bottom of the 30-minute range, this 50, it broke the swing low here as well as here. And so then you can take the short like that, a real small short, but I kind of like those small ones. I was just chatting with a trader earlier, and the small ones are nice because your stop, like the 50 is really close to the 60 to the bottom of the 30-minute range, and then your stop with a 57.75. I'm sorry, a 42.66.75 puts your stop kind of close to the or just above. Right at it, I guess, in this case. It was kind of up above the 30-minute range, so it gives you a little more cushion. If you drew a really big retracement, like the prior one, okay, now your entry is below the 30-minute low, and your stop is also going to be below the 30-minute low. So that was the little long, then the little short, and then same thing. When you start to roll past the negative 23, negative 61.8, you can come in and just start trailing each candle as best you can. You're going to get a lot more profit out of the trade trailing each candle than just getting scared and hitting, flatten and closing the trade like that. And then the last one was this hammer here on the 1 minute. So going back to the 1 minute setup, we had a low ticket lows, 724, and these are all in Pacific time. And that one didn't really do anything. It was a low. I like when the body is, like the body of the candle here is right at the prior low and the tail sticks down lower. So it shows that price went even lower, was rejected, and then came back up. Next candle formed, bounced, or formed, and that was the entry candle, the second candle. And then we kind of rolled over. So stop below this candle's low, and I think it was, let's see, minus 1.5 on that one. This guy down here at 729, it did not have a low ticket lows, but it was kind of that same scenario as earlier in the morning. And it's not a hammer, but as we talk about in the live sessions, as you get more proficient with just trading hammers and inverted hammers, you can look for things like these spinning top candles as reversal candles. And so in this particular one, 729, you had that same scenario where you're going down in kind of lower lows. I'll try to draw a little trend line here. So like you're going down here in lower lows on the nicey tick. You're going down here in lower lows on the chart, like that. And then you put in a lower low on the chart and a higher low on the nicey tick. And so seeing that as a potential reversal, in this case, if we go to the 512, there was not even close anywhere of a kind of pullback. If you look at, okay, the high of that candle was 57, and the bottom of the 30-minute range is about a 60. You got a little bit of room to work with. You're not right up against it. Actually, I take that back. I was thinking that was my gray line. Get rid of that. where did I go here? Lost my spot. 724. Yeah. So we had tons of room between the so 57 is the high of that candle. The bottom of the 30-minute range is a 68. So 10 points of room. Now it's okay taking a counter trend trade. Also, look at the time, 7:30. That's an hour into the day, and that's typically when you're going to see a bigger reversal. So it didn't shoot us up to the top of the 30-minute range, but it did bring us up into the range and had a pretty nice move up into the 30-minute range. When you get into these smaller let's see, these situations here where you have a smaller candle that's inside the prior one, how we just leave your stop below that breakout bar, and then it's kind of like a bull flag, and you can stay in the trade. Yes, this candle dips below the prior one, but its tail holds from below two candles before it, and so that was a nice run up as well. Other than that, the 15-minute today, we came one tick away from the close. I pretty much call that filling it, filling the gap. So the low of the opening 15-minute candle was one tick away from the gap fill. So, and you've heard me say, when we get, if we're a tick away, it's basically filled. So we didn't take that today, but otherwise, that was a pretty good day for 1 minutes, and a couple of good retracement trades in there too. So the bigger ranges are definitely helping things along. I know it's only been a week and a half or so or 2 weeks since the Fed meeting announcement, but starting to get a little more momentum, throughout the day, a little more follow through on some of these pushes and moves, and you catch a 10-point swing in one direction, 10-point swing in another direction, and all of a sudden we got a nice stack of trades built up. You take a couple 5 or 6 point winners, and all of a sudden, even if you're only trading 2 or 3 contracts, it starts to add up pretty nicely. So that's what I've got for you today. Tomorrow morning we'll be doing the live session. If you normally tune in on Tuesday, it'll be tomorrow on Thursday. So hope you have a great rest of your week, and we'll talk to you soon.